Good morning, everyone, and welcome to the European crossover webinar. And sorry about that, my alarm. Actually, my alarm did go off, but the what do you call it, the volume or whatever was low. So I just woke up. I'm thinking something's wrong. Uh, I guess that feeling that you just know when you wake up, and next thing I know, I'm looking and like, holy smokes. But anyway, I guess if there was going to be a day to happen, I guess this would be best because reasonably slow markets with NFP coming up. So that being said, we'll jump into it. Also, even did a little bit of analysis. I even did to show you for the euro to go in and make a point on using the profile and it was specifically on the euro, though I did now show you, especially since we had the big move in the euro. So we'll get to that. No data for today in the European session, but obviously coming into the US session, we do have non-farm payrolls. They're looking for 182,000. Let's see here. And a lot of the other stuff, considering the unemployment isn't as important as it was in the past. Like, the the unemployment rate's key, but I'm saying like the average hourly earnings. Oh, they're moving up so high. We're moving up so much that maybe the Fed will have to react or something. Obviously, with the pandemic and everything that's happened, I have not focused on those type of things. Or what's the average hourly earnings, the week, hours worked, all that stuff. Obviously, under the circumstances, doesn't matter. So it's just really the key number. Obviously, we do have the sub numbers. Obviously, the employment rate, the average earnings, as well as work week hours. Like I said, a lot of those don't matter in the situation right now. We do have Canadian import and exports, as well as IVPMI. That won't be till 10 a.m. Eastern. So once again, non-farm payrolls expecting 182,000. Unemployment rate, well, we'll see. Hard to tell because a lot of this has to do with if people aren't even actively working, then that also has an impact. I think Powell referenced it in that his interview that he had yesterday. So just to clarify on that, we'll go on and take a look quickly before we jump into the analysis on what all transpired. We did see a pretty good sell-off. I was pretty active in the chat room as far as, well, not that I'm not, but I'm saying is very active as far as these levels and coming in. We saw here with the NQ, even shared some of it also on Twitter. We'd come into this area and I said I'd be buying, which I did, which is this 12,232 to 12,395. It also confluenced with a couple of POCs, points of control right here. It's hard to tell here to see where they're at. You can see two double. Well, you can see right here, this isn't even actually double. That's yesterday's. But I looked on, you can see this big old dotted line. The reason I had it there, and I'd mentioned that previously, was the point of control here at 503. And I did share that even on Twitter saying, hey, look, this is important. It actually held twice. It held in European trading yesterday. Then you can't tell because it's a 2-hour chart, but initially it held on the first go around in the morning session in the US. We bounced off of it. Obviously you can't see it because this is a 2-hour bar, and then we receded and I said, hey, if it takes it out, then hey, I'm looking for 360. Well, 360 is what we got, which is down here. So we'll see where we are right now. Obviously this is all as a result of the run that we've had in U.S. interest rates. We'll take a look at also just a quick stab. Take a quick stab here for Bitcoin. And actually, Bitcoin's holding up pretty well. One of the things I didn't notice here, I don't know if people caught on that, was we had a nice little, almost like, and it's not a shooting star because the wick's not long enough. Really would be, although it's a little bit longer than, and generally don't have too much of a base, but more akin to a gravestone doji. And then you can see this market really came off, and that was against that 52,000. I saw that earlier at the time. I don't think I even referenced anything because at this time, I think the market was already coming down here, and obviously my attention was more to what was going on with the NASDAQ. Take a look at S&Ps. They've come off quite a bit themselves. But let's go on and go back here into, back to the NASDAQ. So with that being said, let me get to the analysis because I did make a reference I saved for bear with me, for the euro for once we started the analysis. So bear with me. Okie dokie. Let's see here. And just loading that up. Hang on one second. Let's just go and jump into that now. And I'll show you what I was referencing. Obviously, you can see here the 6E, which is the euro futures, and that's right now they're trading because it's March, so there's not a premium. You can see here that the euro cash is trading at 119.30, and we're here at 119, 32 and a half. So actually, it's trading almost tick for tick. Okay. But let's go in and go over the analysis real quick, and then I'll just reference what I was looking at. And we have a little bit wider range because you've got non-farm payrolls. It says the euro broke lower as U.S. rates got a foothold above 152. You can see how key that 152 is here. I'm showing on a 30-minute, but if you look at this on a 2-hour, I'll switch this over to a 2-hour. You can see that was pretty key if we got above that 152. And so that really opened the door for them to motor lower. In this case, the euro I meant, but as far as the rates, they ended up motoring higher. But once again, euro broke lower as U.S. rates got a foothold above 152. Breakout level on TNX, which is a 10-year rate. Support on NFP day will be 1904 slash, and I don't know why I know I had it. Sometimes I think I don't have it, but I do. And I don't know why it doesn't translate over. 1904/13, with 1889 being the 61%. Resistance will be 2010. So let's just go and move this over here. 2010. And 1904/13. Now, what I was going to reference was it, and I looked at it yesterday or last night in Asia when I did the analysis. When I look back over here, I'll drag this over here. I'll make it simpler. And see if you can see that a little bit more clear. I referenced the profile chart a couple of days ago. It might have been even yesterday in the chat room. Was speaking with a DK trader, and I think a little bit later on I was talking to Loon about it. And I referenced that because at the time when he was at one point he was long, he ended up exiting out, and I said that once we got above was it 2045, that opened the door for that to move even higher. And then I had the value area, which is going to be the 70% area here of the trading session here. That lower value area came in at 1995. So I thought that's where the market's going to go to. And he exited out that day, pretty good profit for him. But in the Asian session, the market went to 1992 and then it rotated lower. And since then we've gone lower. I can go on and reference that, and I can see here if if it was this one right in here. Spent too much time on that part of it. Yeah, it was actually right here. So once this market, you can see we had two pox right here. Once we got that close above that, it was intraday. The market kept moving higher. And let me see. All right, and trying to open it up a little bit. I guess it's okay. Yeah, so once we got that one at 2045, and the market got a foothold above that, I think he ended up exiting out like a 2072, which is pretty good because that was at the at right at the highs of the session. But when I looked at the POC myself, um, I was saying, okay, well, I think I know where this market is going to want to go to. So you can see here the lower value area of the previous day up in here came in at not the low for the day, but the lower part of the value area came in at 2095. So sure enough, in Asia, they're going to make a run up in here. They're going to make a run up in here, and you can see where the market went to. The market went up to as high as 2092. That value came in at 2095. That was the high for the move, and of course the rest is history because we've gone lower. So what I did was I said, well, going ready to move into non-farm payroll. This market's already gotten knocked off a little bit. How much further can it go lower here? So you can see here it went to 1913. Just looking at my conventional analysis. One moment. And we've gone right there to the 1913. But what I wanted to go on and show you was if you looked at the value, look at the profiles going back, okay, you can see yesterday actually, and this is a good point here, yesterday, you can look, let's take a look at yesterday's low, okay? So yesterday's low came in at right there, 1958, right there. Might have been 1960, looks like right 59, 60, whatever right there. But you can see here, I've got support here at 58. Kind of bounced off of that. Well, if you look here on the profile, actually, I'm going to have to go back here to that same area. So I'll show you here then. What I looked at when I looked at the profiles then last night, I said, well, look at this 1954 area. You had two POCs right there at 1954. So if the market's going to rotate lower, it's going to come down to this area, which is going to be 1954. And sure enough, you can see here the market gravitated to move, in this case, lower down to the 1960. So where are we going to today? So what I do is I just look here with my analysis. I always like to get confluences here. I had a close here, then I had a little doji here, which is a close in this open. So I said, okay, that's my level right there for support is 1913. And if we get, because it's non-farm payroll, the dollar strength, interest rates going higher, maybe we do jump all the way up to drop all the way down to 1899. But is there anything else that I can see? So when I look at the POC, look at the profile, I had two POCs down here. You see the one right there at 1913. See if I can expand it a little bit for you. Let's see. There you go. So when you look on here, I looking going backwards. I said, where am I going to see? Where's the potential the next support that's going to come in? You can see we had 2 point controls here at 1954. So I said, okay, that would make sense. We're going to rotate down to 1954. The low was, I guess it was 1960. But I said, where can they move? So what we're looking at, it doesn't mean that's going to be the absolute high or low. But when you look in here, there's not a whole lot beyond that. You see what I'm saying? So where's the market going to go to? Well, that's going to be where the most volume is at, which is 1913 and the day after that 1904. So what my take would be is if you're short, you definitely, this would confluence actually with this conventional area here, which I have already at 1913. So you'd be looking for the market to step in and provide some value right there. They'd step in and cover into that area of 1913, 1904. And I think, and I have that for my low for today, 1904, 1913. But if we go lower, if the market goes and breaks lower, then this actually comes down to 1870 right here. Now, all it doesn't mean that that's the absolute low. I'm just saying is if we get a foothold, and obviously it could be a little bit of a fast market then we're probably going to end up potentially, we can come down here to this 1870. There's a little bit, like if you look here, this is the most volume there, but on this day, the most volume here, but here's the most amount of time that they spent down here, which was just above that. But if you're short, then you definitely would want to take some off around this 1913 to 1904. I'm not sure how much they'll push further. The thing is, though, is that we've dropped this market pretty hard. So they're going to try and push it for all it's worth. So we could potentially, you may come down here to this 1870, which you can see right there, a lot of touches there. And that's where I have this volume, this pop coming in right there, comes in right there at 1870. But you can see here, as you rotate lower, this kind of helps also because if you're wondering how far can you break lower, you can see, wow, they spent 2 good days with some pretty good volume there at 1913 and also at 1904. If I'm short, I want to go on and cover some of that as it goes into that 1913. And you can see we've come down to the 1913. We've actually bounced off it now. Look at this, 1932. Just thought I'd go and share that with you. You see me do a lot of the stuff with the NASDAQ with that. You can do it really with any of the markets, but I'm just saying is I just wanted to go in and share that. I didn't take the time to go and do that with the other ones because I was going to have to go back to look, but just wanted to go and share that. We do have, I've got 1904 to 1913, already had this level in Asia. You can see that's exactly where they went down to with the 1913. But I was looking at my conventional analysis right here, where I do my support and resistance. I always like to do it through the bodies because I always say without using profile, I say, well, that's where the most volume is going to be at because I always say the close is going to be put up or shut up time. So that's where you're going to see a lot of stuff gravitate to. We can see the close here and then the close here, which was a doji, and then the open here. And sure enough, where they go to, right to 1913. But if you look at the profile, you can see that's the most volume on that one day, 1913. And the day after 1904. So a drop into this area should find some pretty good value support. Can we move punch higher, punch lower? Well, yeah, with the non-farm payroll, we may just dip down here to this 1889. The difference is that probably gives you a lot of confidence in this 1870. If you're saying, you know what, I'm going to step in and go and buy it. Well, you've got a lot of touches there. And also the next volume comes in right there at that 1870. See, anywhere between there and 1860ish, whatever, you probably step back and look for the market maybe to rotate back towards these areas. Of course, things are always a little bit crazy on non-farm payroll, or they can be, but we'll see what happens. So then anyway, I wanted to go share that. Let's go and move into the cable now. Hopefully that was helpful. Cable paired back on the backdrop of higher U.S. rates. Support on Friday will be 38.13. Oh, wow. That's exactly where we're at right now. Holy smokes. With resistance at 39.59. So we'll see what happens going forward. 38.13. 39.59. Holy smokes. That's right on the button. This analysis is available in Asia. So you can always just check basic technical if you were to come in early in Europe and just want to know where I've got the levels. And generally, I'll keep them the same unless something wildly comes in before then. But once again, with non-farm payroll, doesn't mean that we can't punch a little bit lower. And really, if you look at the tops right here, that drops as low as 37.36 if the wheels were to come off the caboose, so to speak. Moving on to the Aussie dollar. So the Aussie dropped lower towards 77 cents even as rates take the headlines. Support looking forward will be 76.23 with immediate at 76.47. Resistance will be 77.86. So we could drop as low as 76.23. And my concern is because we've already had a push here. They may try and push it for all it's worth. So I think eventually we can get down to 23. I don't know if it happens today or early next week, but potentially we can get down there. So we're going with anyway. Hopefully the profile helped you because now when I talk about it or you see me posting stuff on the NASDAQ, you'll know what I'm referring to. Uh, Moving on to the Kiwi. Pretty good little slide here in Kiwi. So the Kiwi reacted much the same as its cousin, the Aussie. Key support looking at will be 71.11 with resistance at 72.26. Now to the CAD. Dolly Yen posted a consecutive hammer, but with a wider range. You can see that right here. The other one we had a little mini hammer. This much wider range. Support on Friday will be 25.79 with resistance at 27.37. You can see here we've actually almost ended up putting the resistance there because there's a 50-day moving average. I thought, nah, give it a little bit more room. So 25.79 to 27.37. Dollar peso. Holy smokes, this thing just keeps going higher. So the dollar peso continues its strong up run. The breakout from 10 days ago projected a move to 21.62. If you remember, we did the extension here, and it's funny because this was to 2062, and we projected it out. It went to 21.62. We still got a little ways to go, but holy smokes, it's really come about. Resistance on Friday will be 21.36 with support at 20.87. Next is Dolly Yen. This yen. I'm going to go to the weekly. The Dolly Yen still on full bid with the catapult of U.S. Rates. Resistance on Friday will be 828, followed by the weekly level of 850. Support will be 751. So that is that. You see this comes in this weekly level. See if I can. Do it there. Okay, right. See that right there? That close. There you go. Comes in right there. Right, that close right there, 850. And that confluences with these two highs and this open. So it's going to be 850. And what do I have for support? 751. Onto the cash dollar index. So the dollar index closed above the prior reactionary high. Actually, I got to move this to daily. You can see that prior reactionary high right here. So the dollar index closed above the prior reactionary high, which is 91.52. Resistance on Friday will be 92 even with support at 91.17. So we're pressing against here. You could make the case for this 92.17. Like I said, I don't even want to hear about a bullish case until we get to 92.68, because once again, usually the dollar's the safe haven cover, and with markets going lower, it never reacted. Look how far we've fallen. You see what I'm saying? So when you say like, okay, that was in March, so I don't even want to hear about a bullish case until you get above 92.68. What's driving the market finally higher is just U.S. interest rates are so much higher. But look, we still haven't even taken out 92.17. I'll stick with my 92, but this is a logical area here, 92.17. Just beware. I'll stick with my 92, but we probably do have a good chance to get to 92.17. But the market doesn't even, you can't even talk the case. Like, I'll give you an example. I mean, perfect example. Look at the peso. Look how much work the peso had to do. And you see, I just kept going. The peso didn't get bullish until we got above 2062. Once we got, and still they receded. You see how they got above it? And then they came back. Once we got above 2062, then the market was wide open. And when you do the projection here, we did this about 2 weeks ago. I think it was 2 weeks ago. Could have been a little bit less than that. We did the projection here, and the projection from here to 2062 came up exactly at 2162. So that's where the first full move would take us to 2162. Then we might back down. We'll see what happens after that. So when you look at it, you say, okay, yeah, I see that. Yeah, it really wasn't bullish until it got above that area, because you can see how many times it kept dancing around until it finally got to there. So now when you look at the dollar index, that thing's not bullish. Yeah, we've broken above that. Oh, yeah, is it bullish like a couple of days ago? But yeah, you look here and say, well, this thing's been terrible. You would think that we've been at all-time highs like forever, and we've been coming off these highs. And when we had swoops, remember in October, this thing couldn't even get above 95. We had that big old swoop in equities. You see what I'm saying? So, and we had another swoop, I think it was in December. Same thing, no reaction. And still, until U.S. interest rates started finally super climbing, now we're seeing the reaction. So, like I said, yeah, potentially we can get up here to this 92.17. I'll stick to my 92 even, but it doesn't even, you can't even make the bullish case until we get above 92.68. And now actually, and you can see that in the peso I just mentioned, that should be 2 consecutive closes above 92.68. Just like the peso, it had that one move above 21.62. It closed, but we receded for 3 straight days, and then we popped back up. So once again, it's going to be 92 even. And on support, 91.17. Would not seem likely, but I'll stick to where it was. Onto the cross rates. No changes here. Look at that. Yesterday was pretty relatively quiet. Well, let's take a look. We're here. $76, yeah, there's no changes there. On to the Euro pound. No changes here either. We're trading pretty quiet. Look at that. We have gone to the lower end, 86.12, but no changes. So on to the Euro odd. Things been pretty quiet in cross rate land overall. 54.01 and now 55.33. We have moved up to this 55.74, but these numbers can come up rather quickly. You can see here, really hard to go in. We can go and take a look at the 2 hour to see if we see anything here on the upside. We are moving higher, breaking out a bit. Right there, 55.91. Yep, 55.91. And support should be able to defend back to here, which is going to be 54.74. That would be support on a pullback. I don't think he's going to pull back that far. Move back to the daily. Euro Kiwi. Kind of breaking out a bit here. There's your first resistance right there. You see that? And there's some confluence. You see these? I'll show you. Make it a little bit easier. Right here, you see here? But look, you've got this low right there. And you got this highish area here and this up. So it's going to be right there, which is where we're at. Or we just about 67.43. Support, go to the 2 hour. It's going to be right there. Actually, we can just go with the open right here. Good confluence, which would be 66.65. Not that I expected to come back that low, but that'd be the make or break point, 66.65. And Aussie Yen. Oh, we're holding this 83.12. And 83.04. That we'll just leave it here for now. We can't pull lower. We can go with this low wick right here. And that's the low there, which is 82. 82, 87. Only because it's Friday. They may want to try and punch it a little bit lower. And the upside is going to be this wick right here, which is 83.62. Onto the guppy. This is still holding up pretty well. Interesting. Let's go with this wick here, which would be 50.12. And support these touches coming across here, which would be that close right there, 48.90. And lastly, starting odd. Well, you can see right there, that level coming across. Big level too, which is 80.40. And support. right there, 79.53. And there's the boss chart. And that's it. I'll get that posted. And thanks for joining us here on the European Crossover webinar.